Hey everybody, what's the market doing? What's the market doing? Well, this is the first trading day of the new year, the first major trading day of the new year. I know some markets were open yesterday, but the U.S. market was not open yesterday, but it is open today. So we opened much stronger in stocks, oil up 160 in the stock market in the Dow, and now up only 30. So most of that has been given back. I don't know how we will close. Not that I am really concerned about that. Not that one day means anything. Okay, I've been asked that question many times in the past. Mike, did you see what happened today? The market didn't react the way. Well, let me tell you something. One day doesn't mean anything. You shouldn't try to ascribe any particular meaning to one particular day, or for that matter, for a week, sometimes a month, sometimes many months. You should not try to ascribe some kind of meaning to every little squiggle. Most of what happens in markets is noise. Markets reach an equilibrium level. They kind of sit there. They bounce around. Supply demand imbalance, whatever the fundamentals are a certain such thing, and everything that squiggles around is noise. That's why, people try to trade very short term like that. Like I spoke about that yesterday, like a day or two or hours. You're just trading noise. I mean, that's like I say it all the time. Go to Vegas. It's more fun. Nice climate, good looking women, right? Go to Vegas. More fun. Beautiful hotels. All right. So anyway, here's my thoughts on this. Same thing, right? I just finished up this week's edition of MMT Trade. If you don't have it, go to pitbulleconomics.com and get your 30-day free trial. Pitbulleconomics.com. Click on the tab that says products, and you'll see a little link there that says, get me my 30-day free trial. So go get it. All right. So, I've been talking about the fiscal flows, aka federal spending, that is flat growth year over year. I do not look at that as something positive, all right? We need growth in that. I have also been looking at I think, a pretty kind of disturbing, for lack of a better word, picture in bank loans, which have been falling off a cliff, all right? And that has not been like an ongoing thing. That has been a recent development, I would say, from the beginning of this fiscal year in early October, but really recently has accelerated downward, all right? The loan growth now at a 27-month low pace. Total bank credit, which I would call the broadest measure of lending, also at a 27-month low. And if you look at different components in lending, if you look at real estate loans, if you look at commercial and industrial loans, if you look at consumer loans, all slowing down dramatically. Okay. So you have loan growth slowing down. You have fiscal flows flat year over year. Now we're coming into a really important time of the year, which is the IRS tax refund season. I talk about this every year. January, February. February is the biggest spending month of the entire year for the federal government. You could have an additional 200. I think last year we had something like 240 billion on top of the regular 400 billion a month, right? So huge month. We had 500 something billion spent in last February. So these next few months, January, February, huge, March, they're usually big. But I'm going to be looking at the comparisons of IRS tax refunds this year compared to last year. That's also going to give us an indication. I mean, the economy depends on that flow. It depends on that flow. It's not just because we say, oh, all right, it was 450 billion this year. It's not going to be enough. It depends on a certain amount of flow. Last year we got well over 500. I think it was 520 billion in February. 520 billion. All right. What else? Back to this loan situation. I don't know. That doesn't look good for bank earnings. If loans are the key asset of every bank, that is their biggest asset. That's where they earn their money from. If loan growth is falling, if it's decelerating, it really raises questions about bank earnings and the whole financial sector of the stock market. So you got to think about that one. And I know there's a lot of people out there saying, oh, the financial sector is going to lead everything because Trump's going to deregulate. That might be true. But again, getting back to Trump, we don't know yet everything. We can assume. And I would have to say that the level where bank stocks are right now, where financial stocks are right now, I would have to say that a lot of that is already discounting a very, very, very positive Trump administration position towards the financial sector. So that's some and most of that's baked in. You got to have that happen. You got to have that happen to the degree that the market is now pricing it in. That's what I say. Inflation's going to pick up, all right? And again, I was the only person who said this. I see you can go back to my videos early last year where I said, you just wait. When they start raising interest rates, you're going to see inflation pick up. You're going to see gold respond. It's taking a little time now, but that's okay. You're going to see it respond. You're going to see inflation pick up, and you're going to see the dollar go down. Nobody's saying this. They might be saying it for different reasons. A candlestick chart is telling me it crossed over the 40-day moving average, and there's a hangman with a noose, and you got a Fibonacci divided by a death cross. I don't know. But I'm the only guy saying this is how it works. Rising rates, I explained it. Currencies work the same way as bonds because they're basically, those two things are the same. They're interchangeable. A currency is a bond with zero maturity. Everybody understands that when they raise rates, the price of bonds go down. So how come you don't understand when they raise rates, the price of currencies go down? Same dynamic there. You get a discount to par. That's how you earn the yield, or that's the implied yield. That's how it works. All of you think, oh, when the rates go up, everyone wants to buy the currency because you earn a lot more. Then why doesn't it work the same way for bond? When the rates go up, you have a huge rally in bonds. No, everybody knows it goes the other way around. But yet when it comes to currencies, they're like, oh, that's so bullish. It's not. It's not. I'm the only one saying this because I'm the only one who understands this. I'm the only one who understands this on the whole freaking planet. The only one. Unbelievable. Guys, wise up here. Come on, really. If you don't have patience, you're going to look at the noise and say, Mike wrong and he's wrong. He doesn't know what he's talking about. Because it didn't happen today in your head. Freaking ridiculous. Come on, don't be ridiculous. All right, everybody. See you later. Bye-bye.